Welcome everyone. How we doing? Hope everybody had a good day today. Couple more people trickling in. How we doing? We're just gonna give it a few minutes. That's the way it goes sometimes, Husky. Yeah, we had a pretty decent one in voice chat today. Still just kind of that low volume, extra low volume. I don't mind low volume, 40, 50 million, but I mean, these days you're sitting at 15, 16 million until the last hour of the day. And like that's why the SPY charts have looked all choppy and we don't have the volume in the market. But yeah, I got smoked. I don't know if anybody I tried some SPY calls with the like 1 minute left in the day. And those went to zero. That's just the way it goes. But had some nice hits before that for sure. Couple 100%ers, nice 50%er. But it was a weird day. We like that's something that I've learned. Days that look like this, they don't they don't go well for most people. We're actually going to cover because I love days like this. So we're actually going to cover some range trading, how to trade ranges a bit better here in about 2 weeks. And people tend to really, really like the range trading lecture, and then after that, they often start to do much better on those days. But when we've had a whole bunch of, slow grind up days or things like that, or, dips getting bought and then they just grind us up the rest of the day. People are in that habit. Like when you go through these charts recently, this is the first real like choppy day that we've had. So, don't get down on yourself for a red day today. Most people hate these kinds of days. So you'll get them next time. And like I said, I'll just give it a few more minutes. How's everybody else doing? I got a few more people showing up. Hope everybody had a good day. Like I said, choppy day. A lot of people hate this kind of stuff. So I get it if today wasn't your best day, but don't let it ruin your tomorrow. Guys, just getting started with options. Well, be careful. Risky business. Oh, I'm doing good. Thank you. Thank you. Yeah, and happy to do this. This is, my favorite. I don't recognize your name. I don't know if you're in pro or not, but I like teaching. That's what I've done for a long time. That's always what my tab in OOT has been about, very rare alerts with mostly teaching and some charts and, trying to help people. Trading's super easy. Everybody's capable of doing it. You just got to put in that little bit of work. And so that's always what I'm here for. I love teaching. And I love trading. So, I might as well do a little bit of teaching about trading if I can. Well, options basically since like 2016 or so, something like that. But I was in the market for some years before that as well. But I'll just share trading or, occasional options, but mostly shares. But then I really picked up the options 2016. I don't know, 8 years options, but I don't know, 15 or so in the market before that, or not 15 before the eight, but 15 total. Nice, yeah, premium membership, great place to start. OOT is awesome. I love this place. It's the only Discord I've ever really been a part of, and uh, I like it. We have some truly amazing traders in here. I've traded longer than most people, but there's even a few people in here that I'll go to with questions. We got some very, very knowledgeable people in OOT. We're super, super lucky. Pro's been awesome. It's just a little bit more serious. You might have seen occasionally the trade floor will get a little wild in normal OOT. So we try to keep that a bit more under control in Pro, but Pro is pretty much just me and a few other people just posting charts and talking trades all day. So it's not a huge difference from OOT or anything like that, but definitely if you're a little more serious about it down the line, it's a great place to end up. 1 second. Yes. Yes, I see your question. Did I teach myself how to do? Yes, I did. Obviously, I mean, I should say that I'm terrible at all things computer and stuff like that. So I've definitely asked some questions along the way, but I had been using it for some years beforehand. But then we just got some people who are really good at the technical side of stuff in OOT. And so any questions I've ever had, I've always been able to be answered. But it's simple, everybody I use Thinkorswim. I've done some classes on how to set it up like I do it. I should probably do another one of these days. But I use Thinkorswim. I think it's great. I think it's super simple to use. People try to act like it's really advanced, but generally speaking, when they start telling me, how you have to place orders on Webull or Robinhood or anything like that, it's a lot faster and a lot smoother on Thinkorswim. So I've always just stuck with that, and it's where I've been for so many years that it's what I like to trade on. I get it. Maybe it's not for everybody, but I just figure, wherever you're charting, you should be trading on the same platform because, time is money when you're trading. So it's worth it to just always focus on whatever platform you're charting on, then trade on that one as well. And again, I'll hate on Webull and stuff, but Webull's great. Robinhood actually will give you better fills than Webull even. But I've, played around on Robinhood myself and I do have trouble trading on it, but Thinkorswim's just easy for me. The best advice that if I had to give a person, uh, uh, if I had to give a person a little bit of advice, two things, you're a beginner trader, you want some rules under your belt. The most important one, number one rule for any and all traders, use a stop loss. That is no questions asked. That is the most important thing a trader can do. You need to identify your stop loss and you need to identify how much money you are willing to lose before entering any trade. That is should be everybody's rule number one is know when you are admitting you are wrong. That's just crucial. And then the other rule is, or the other thing that I would think of is you don't always need to be in a trade. Something that I always tell people is the best day traders on the planet, the best traders on the planet, they do nothing. 90% of the time. And you wait for your perfect trade, whatever that may be, however, whatever your strategy is, you sit there and you wait for that trade to come to you. One of the huge issues beginners have is over trading. And so that's something that I teach a lot, and you'll pick up on that in my classes. How this series that we're doing now, we'll talk about the things that I look for and the ways that I trade. And you'll see very quickly that if unless it's a scalp intraday, something SPY QQQ, unless we are trading around one of my levels, not saying my levels are, 100% perfect or anything like that, but if we aren't trading around one of my levels, I'm not trading it. And so, that's the best advice I can give a beginner is use stop losses and do nothing most of the time. Oh, there we go, D. Okay, gotcha. What platform do I use? This is Thinkorswim. This is what I use 99.9% of the time. And then so as far as stops, and we're gonna move on to what we're talking today after this. As far as stops, I will never, ever base it on a percentage. I might have a max amount of money I'm willing to lose where if the trade is going really, really wrong, I just have to cut my losses there and that's it. But I will always base my stop out on a level. We actually had, so we took a QQQ trade today in pro, and I'm just using this one as an example because it's what I was trading, and so I'm gonna show you exactly this. It doesn't have anything to do, but I always will talk about stop losses because I want everybody to use them. And so what I teach people, and all of these studies, none of them are nothing fancy. They might look fancy, but they're basically all already on your platform. What I always teach people is that when you enter a trade, you need to know three things. Where are you going to enter? Where are you going to stop out? And where are you going to take profit? That's all we care about. Those are the three most important things. So we took a trade right around here. I had seen this little downtrend forming. I had seen a sell down to the EMAs. We had EMAs crossing over EMAs, and we aren't getting into all of this. I'm just telling you everything I saw in here. We also had all the big tech names that support. We had XLF, XLE ready to bounce. So we took our entry right around here on when these candles were holding this 9 EMA. And I told everybody our stop is a candle close below this previous low right here. We don't know how long we're going to have to hold the contracts. These are same day SPYs or QQQs or whatever. So we don't know how long we're going to have to hold the contracts. And this might start out as, a 10% loss. Well, if you hold them for 30 minutes, your contracts get beat up, it's going to be a bigger loss. But we as traders, that's where we stop out. So that plays into our rules. We want to know our entry, we want to know our stop out, and we want to know our take profits. And so anything that happens in between any of those levels does not matter. So if we enter here and we never close down here, we don't stop out. Our target was up here. So when we take this bounce, we aren't taking, we probably trimmed. I always encourage trimming, but this target right here, when this candle's hitting it, that is the first place that you take a pretty substantial trim off of your position. So we knew our entry. We wanted to enter around this VWAP and 9 EMA. We knew our stop. It was a candle close below this candle's low, and we knew our target. Now we do nothing. We enter the trade and we let the trade work, and we don't panic and we don't freak out and we don't average down on these little wicks down or anything like that. We hold the trade and we let it work. We're either wrong or right, and that's it. Okay, and so with that, great questions too, and we'll have time for questions at the end. With that, we're gonna get rolling. Little late start, but no big deal. This class is smooth. Most people get it really quick, and there's plenty of time for questions at the end. But thank you for being here, Dirty River. Lots of new names in here. Love seeing it. We've been getting a ton of new members lately. Thank you everybody for joining OT. I'm not an owner or anything. I just like the place, so it's nice to have you. And today, and for anybody who doesn't know, today, last week, the week before, and for about the next 6 or 7 weeks, I'm running, I call it a beginner series, not really a beginner series. It's just the things that I find essential when it comes to trading. The things that I look at every day, the things that I trade around for anybody who's in, and I do premium voice chats now as well. But for anybody who's in pro, you know, when you're listening to me trade or anything like that, I just want to show people that's what I'm teaching you. What I look at, what I've learned over the years, I like to use, the things that I like to trade around. And that's really, you know, that's what I'm trying to teach in these classes. So it's not, you know, like I said, it's not necessarily like a beginner class, you know, only, you know, I'm sure we have some people in here that have traded for multiple years. There's hopefully something for everybody. And you know, my trading style, it's relatively simple. It's something that everybody can do, you know, man, if I can do it, anybody can do it. And so that's what I'm trying to teach. And so our first class we did support and resistance, obviously crucial. Next class, we covered EMAs and SMAs, which we're going to do a little bit more of today. We aren't going to, you know, we talked about the ones that I like, the different combinations that I use in the previous class, but today we're going to talk about, you know, how and where do I start to apply those on, you know, my actual trading throughout the day. And so, you know, this class, it always kind of surprises people because, you know, it talks about long time frames. And then, you know, most people, you know, I don't know why, but people have just decided that I'm not a swing trader, that I only scalp. And so most people think of me as a person who scalps. And, you know, I'm in trades for a short amount of time. You know, my ideal trade is 10 or 20 minutes, really. You know, when I'm scalping, I don't want to sit in a trade for too long. And then they get confused when they see me always talking about long time frames because, you know, I'm scalping very short time frame. Well, not very short, I'll never go below the 5 minute, but short time frames, you know, 5-15 minutes. And then I'm always talking about the daily time frame. Well, the daily is where I get all of my information. And so that's what we're going to do today. I always like to talk about SPY, mostly because everybody trades it. And so I'm going to show you how we use or how I use the longer time frames. You know, I mean, we might touch a little bit on the 1 hour. We'll talk about why we're using it, even though it is longer time frame, but I don't consider it long time frame. But then we'll talk about the 4 hour, talk about the daily, and we'll even touch on the weekly a little bit today and how I look at those and how I analyze those to help me trade during the day, you know? And so what I always like to tell people when we're talking about support and resistance, the strongest levels you can find will come off of the daily charts. There's no argument. I mean, you could say weeklies even, but a lot of the time the weekly levels don't come into play quite as frequently as a day trader might need levels to come into play. So the daily is that really nice middle ground of when you're trading around big daily levels, you will get reactions there. No questions asked. Like, and they will work over and over and over again. The example that I always use to people, because, you know, a lot of people have been trading a little bit longer now, is talking about, you know, coming into 2022, you know, we had the 2022 bear market, and you know, I'm always talking about daily levels, and people say, oh, well, what happens when there's not daily levels? You know, when do you delete them? And the answer is you don't delete them. You always use them. So when we had the bear market of 2022, obviously ended, you know, technically speaking, ended around October of 2022 before the trend reversed. This whole way up, all of 2023, you know, this whole rally all the way up to 2023, finally cracking those end of 2021 all-time highs. I was trading these daily levels. And you can see over here, you know, we'll talk a little bit about it. You know, I'm going to mark something if I'm marking levels and I see something like, you know, a double top like this on the daily, something right here, and then I see this dramatic high right there, those are levels I want to mark. Then if we go forward in time, well, that ends up being a big rejection point 2 years later, year and a half later, whatever it is. And then again, you know, results, obviously it's not just that level, but, you know, results in some big selling. And then again, when we finally get the breakout above that level, we get a nice big push above it. And these are levels, you know, this is going into the end of 2023. We're getting the breakout of levels that traded back in the very beginning of 2022. So daily levels will always work, and they will work over and over and over again. And so that is what that's what I try to teach people to do. So we use those intraday. And there will be times like now when we're at all-time high, you aren't fully able to get all of the levels that you need from the daily time frame. So that is why today we're going to talk a little 4 hour, we're going to talk a little 1 hour, and I'm going to discuss how I treat those levels. And then we're also going to, for the first time in this series, kind of touch on a couple other things that I personally like to watch when we're trading at these all-time highs to maybe help us identify some additional levels that we can trade around or upside targets or whatever it may be. And so kind of long drawn out intro there, but with that, we're going to start talking daily time frame. Let's see if I have any questions. Do I use order flow? Nope, I don't use flow at all personally. If I'm curious if somebody sees flow into something, I'll ask some of the people who love Flotilio. For example, Noodle is another great flow reader. Joe, another really good flow reader. So if I have questions about flow, I'll ask it, but I've just never found any use for it for my trading style, I guess. I mean, as I said, I've traded for a while and I never used it, so it just never found its way into something that I like to use. However, volume, I use it all day, every single day. I use it on everything that I use. I'll watch option contract volume. I watch obviously market volume. Volume is the most crucial thing in the market. Learning to understand volume is very important. I was even talking about it earlier. These wildly low volume days are like they're getting a little bit old. We want give us 40, 50 million, please. But volume is absolutely crucial. If you ever talk to a trader who doesn't look at volume, they frequently aren't having a very good time. At the very least, their entries are probably pretty bad. Volume tells you a lot. We aren't going to get into that today, but yes. We will talk some volume. I even had somebody reach out to me that I have no recorded lectures on how I use volume. Unfortunately, how I use volume is tricky. So people are just going to pick up on it. Yeah, Husky, I wondered if it was you. I'm going to try to touch on volume a little bit more as we go through this series, because for me, especially on intraday stuff, volume's hard to teach without being able to watch it happen, if you know what I mean. Like today, somewhere up here, we were trading and I think we caught maybe we caught this bounce, doesn't matter, but we were trading and I watch option contracts all day. I like to watch the option chain. I like to watch the Greeks change, and see, try to take advantage of some of the little nuances of option contracts. Well, I mentioned as this candle was going up, all of a sudden the call volume just stopped. And I mentioned, I was like, God, the 607 put volumes are just going crazy. And they were going up by the 1,000 while the call side was not going up. And ultimately we sold. I don't know, who knows why. I don't know why we sold, but ultimately we sold. And the 607s paid a lot. I wasn't in them or anything, but that's not something you can teach after the fact, because I'm watching the numbers shift in volume. That's why with my volume studies, I watch those numbers shift and I run the daily volume and I run the 5-minute volume. And then I also have, and if anybody wants this, I also have this fancier volume indicator just to show you it. So I have this fancier volume down here. And so it shows you deviations, like, is there a bunch of buying? Is there a bunch of selling? That's what the purple and blue mean. It kind of shows you the, current bar selling, the average selling volume on the last 9 bars, on the last 60 bars, whatever it might be. Volume like that. So if anybody wants that, it's good. But okay, so with that, we aren't talking volume today. Sorry, everybody. Sorry. We're going to the daily time frame and we are talking long time frame analysis. So when I start on the daily time frame, and we touched on this a little bit, the first things that I'm going to do is I'm going to pull up some of the EMA and SMA combos that I care about. And so obviously we aren't trading anywhere, I won't say anywhere near them, but we're $10 above the closest SMA. I use the 2050 200. You can slap the 100 on there if you need a middle line as well. But I use 2050 200. We're nowhere near there. but I want to be aware of it. So then the next thing that I'm going to do, and this is something that I always use the 513, but I started to really like this on the longer time frames, and that's something that I picked up from Tilio. So 513 EMA, it frequently picks up on little reversals first, things like that. And it often offers very nice dip buy opportunities. And it can kind of tell us when we're getting super extended from it. Obviously, this was elections, so this one's crazy. When we're getting super extended from it, you're frequently going to get a little bit of a pullback to it. But intraday, for anybody who's been trading with me, this is frequently something that I will check on the longer time frames. And when we're trading, if we're trading in voice chat or whatever it is, or I mentioned in trades in my tab, and you might see me, buying calls on a dip or short, even, on pushes up, big strong days, you might see me shorten some of those things to try to get the rejection. Well, it might be because of the 5 and 13. And so as we can see here, the 513 dip buys have been working really well for the last week and a half or whatever it is. And then today and yesterday, as we've gotten more and more extended, I've been super open about it. Tilio's been talking about it. Basically, everybody who studies the longer time frames has said, and I'm not saying it's because of the 513, we need a little bit of a pullback. Just to kind of reset these EMAs. None of us are turning bearish, nothing like that, but we need a little bit of a pullback. So, I mean, I'll happily scalp. We scalped long multiple times today, but swinging long, I don't swing long when we start to get this extended from EMAs. We're really pushing some new highs. So my real next spot that I'll have interest in buying the dip and swinging it potentially is going to be when we're able to pull back to this 5 EMA. So I look at those, I look at my EMAs, I look at my SMA combos. I can even put this one on here. We can label it so we remember what it is because it's kind of in the ballpark of where we're trading. So we label the 5 EMA right there. And then the next thing I'm going to do is I'm always going to look for any sort of major levels we have. And how I chart support and resistance, and we covered this in my support and resistance class a couple of weeks ago, so we won't go in too much detail, but the first things that I look for are on the daily time frame, and I look for major highs and I look for major lows. We've basically just been grinding up for the last little bit, so we don't have a ton of major highs or lows or anything like that right now, but you get those on the chart. Then anywhere, if I don't have a level and we've taken a few rejections, I always want to be aware of a little zone like this. And obviously it's 600, so it's a big psychological number as well. Anywhere in this 600 to 601 area, I like that dip buy, especially if we can sell a couple days. That'll likely reset us down here to this 13 EMA, where I typically feel pretty comfortable on buying the dip. The stops will be tight. So these are going to be the very first things that I look for on the longer time frames. What can I find on the daily time frames? Well, one of the main questions that we get asked all the time is, how do you get upside targets? So now we're covered. This isn't a bunch of levels. Like we got 1, 2, 3, 4. We got 5 levels in basically a $10 range. We know there's more levels in there, but none of these candles for me on the daily time frame hold enough interest for me to slap a line on them. We've had some little breakouts. We typically meet some consolidation on them, but we haven't had any, nice big consolidations up here at these all-time highs. We've basically just been grinding up. So people always want to know, how can you identify some other targets? So one of the ways that I like to do it, and one of my favorite ways to do it, is Bollinger Bands. And so they're super ugly, no denying it. I have a little chart in the corner that I frequently, I glance at all day long, but I don't like looking at bands. They make your charts really ugly and just a little too crowded for my liking. So I look at the bands, and bands are basically standard deviations of upside. So when we start looking at them, this right here is actually the 20 SMA. That's why it lines up right here. So we already have that level on there. Well, for upside targets, this is going to be some of the places that I look. And obviously, we could add this level yesterday, but we've pushed up a little bit, and then maybe a big extension target, 614. We don't know if that's coming. We do see a little bit of momentum pushing to the upside still. That's what the bands are telling us. But there's a couple more levels for upside targets for us. Well, we also know that there's likely more levels than that. So one of the ones, and more and more people are using these. I'm going to take the bands off just because nobody likes to look at bands on your chart. You guys are probably seeing that. We'll take VWAP off as well. I typically run VWAP with the Bollinger Bands on short time frames. So one of the next ones that we look for, and a lot of people will use, is going to be some sort of fib. So you can run, your Fibonacci retracements if you want, and then, you'll have your 0 to 100% retracements. Well, you can add them on the other side so they actually go up. But what I will personally do is I'll do Fibonacci extensions. And so when we had this pullback, we aren't going to, we aren't learning about fibs tonight, but I'm going to show you two uses of them on the daily time frames where we can kind of get some ideas of, potential pullback areas, places where we might want to buy the dip, things like that. And so first we are going to do a fib retrace. And the first one that I'm going to discuss tonight is this low to high move that we had in the beginning of November. Again, this was off of elections, so big news move, and I'll frequently pull the fibs on those. And so all I'm doing is I'm drawing them from the low, the swing low, some people call it, but our most recent low to that most recent high. And then you can see we ultimately got that 50% retrace. It even lines up perfectly with one of our big levels we had from previously. So we know that's a good level. Then obviously we've redone the whole move to the upside. So we have retraced all of that. Well, now we want upside levels. And so I'm actually going to do the same thing, but I'm going to use the fib extensions. And so when I'm using the fib extensions, I'm doing the same exact thing. I'm going from low to high to, right about where we, to right about where we turned around. So the difference that you're going to see with the fib extension is you actually click 3 times. On a retrace, you only click twice. You have your low and your high. Well, the third click is the midpoint, they call it. So there's multiple ways you can do it. If you're really just looking for the true, extension upside, you can just click right where your top is, basically double click right there and get a few fib levels like that. Or, and these are fib levels that a lot of people have been talking about. Obviously, this 23.6 that we're sitting at right now, very close to where we rejected today. And so that's, a nice 23% move. Well, how I actually have had them drawn, and I know it's a little different than other people, is we had the push up, and now we already know this was the 50% retrace because it lined up with the 50% retrace. So we know that that's our midpoint of this move. Well, now we have some levels up here, and we can already see, 5 EMA lining up with a level. Another highs that we have drawn lining up with a level. Again, these are the B band levels, again, we're right in the zone. So for me, these are the most important levels on the SPY chart to me right now. This is how I've had them drawn. I love it when I have, like, we can even see right here, and obviously we have 600. All of this is like we buy the dip here again at this 604.13 up to 604.64, whatever it is, that 5 EMA. That's the place where we look to be dip buyers. On the other side, if we're pushing up, then, if we're pushing up, we know we want to ease off on the longs here. And don't get me wrong, people asked me 2 days ago, hey, would you swing SPY calls? And I said, no, that was just, that's me. I don't swing on candles that look like this. I don't swing on consolidation like this. I swing when, we're at, big resistances. If I, back here, gun to my head, if somebody said, what do I swing? Calls or puts, I would have said puts because we are at a big level and you don't buy calls at resistance. And so again, that big gap up came, everybody said, hey, you were wrong, and that's fine. People can be wrong, but these are the levels that I care about. Well, you still see that we have some big gaps. We got a $4 range between these, but we've identified some really, really good trading levels, but we need a little more. So this is when we drop into the still longer time frames, But the 4 hour, the 1 hour, because we have so little data up here, we know, we know we have to go to the shorter time frame. When there's only one or two candles ever at these prices, you can't get a ton of information off the daily. And so first place I go is I always go to the 4 hour, try to identify any sort of trends, anything like that. I'll frequently draw them on the 4 hour. We really don't have a nice 4 hour trend going, you know, that's easy to draw. Obviously, this trend that could have been drawn broke down and then continued on. Same situation with this one, broke down, continued on. So really, the trend that we're watching is basically right here. This is what we can gather from the 4 hour chart right now. This is what we are watching for the trend. There's no denying that the trend is up, and it has been for 2 weeks now, but the trend is up. So now we've identified a trend off of our longer time frames. Well, we still aren't getting a ton of information on these candles. We can zoom in, look at our after hours candles. That's one of the big advantages to the 4 hour chart is you include after hours, which is great because I think you can get really good information from the after hours charts, and you can find levels on it. You can find things that you aren't going to see on a daily candle. However, things can happen, like we actually have a prime example of it going right now, QQQ. So everybody was saying, I don't remember, a couple days ago, that we had, no, we aren't at new all-time highs. We set one in the after hours. I don't even remember where it was. Well, nobody on Wall Street thinks of it that way. Nobody on CNN, CNBC, none of those people, MSNBC, none of those people are going to say an after hours all-time high counts. So it got a little confusing there for a couple of days while we were setting new all-time highs, but they weren't after hours ones. But it's nice to have the after hours information when you need some levels. But as I said, we aren't getting a ton from the 4 hour. So this is why I hinted earlier, you have to bump it down a little bit more and go to this hourly chart. And then you can start to say, okay, here was a big area of resistance. We tried to buy up to it and rejected it for multiple hours. When we finally broke above it, we took the nice push up. And then again, you can see back here, this zone worked pretty dang well for us. So not a ton of levels in this zone. Really, the only one that I would take note of is going to be around this 605. This wick's pretty well accounted for. This wick is close enough to 605. This wick's right about our 605. So that's what I would have interest in here. Now, really, the last things that we want to take note of on these longer time frames is previous day high and low. You can mark, and we did here, we marked the low, we marked the high. So these are levels, and this is where, I want to talk about these. These are the hourly charts. These levels that we added on the 4 hour and added on the 1 hour, they won't necessarily last forever. So that's when we as traders, we need to say, okay, hey, we marked this, we marked the yesterday's high a day. And ultimately today, if we look at this one, yesterday high a day, we tried to break it and failed below it. And ultimately the buyers were never able to sustain it. So it worked. But we don't know if it'll work tomorrow or work the next day. But we need those levels. And so that's how we mark them off those higher time frames. But we as traders need to come back and say, we got this level from yesterday, we got this level from yesterday. We as traders need to say, hey, these levels aren't working, I need to delete them. So you'll have to do that every once in a while. The longer the time frame, less frequently will they not work. It's these hourly ones, it's these 4 hour ones that don't work quite as well. So now you've seen what we've done. We've done some long time frame analysis. It doesn't matter if we're at all-time highs. It doesn't matter where we are. I will frequently be using, fibs, support and resistance, and Bollinger Bands to figure out where I think we are going. Is the previous day really important as a level? Oh yeah, absolutely. Because if you break down previous day low, you're breaking down. That's the gauge of the breakdown. Like if you aren't below a previous low, then you aren't breaking down. You should be in dip buy mode. But today I personally kind of thought, this when we started selling, I was kind of expecting us to, maybe take this flush down in after hours. Looks like we didn't quite get it. We did continue to sell. But these would be like, again, this 605, these yesterday lows over here, extremely easy dip buy. And then even this morning, it wasn't long, yesterday's high. We bought this first pullback and caught a little pop, and then we were out of the trade. And that's even what I said. Set your stops at 608. Once we popped over it, stops to 608 because previous day high matters, previous day low matters. So that's what we do. We mark all of this stuff, and then just to reiterate, obviously we have some more advanced things on here. We got fibs, we got Bollinger Band levels. We know they're all from the daily time frame. And so what we do, and we know that basically all of these levels are fibs, bands, or some sort of EMA. So we had all of these levels. And what I always like to do and what I always like to teach people to do is you've got your levels, you have all of this information on the charts. So now go back and make sure they work. And people, they ask, how do you do that? Well, we can see these dotted lines here where our fibs are drawn, because we went off these highs. So these are where our fibs are drawn. So I like to go back and I like to just scroll along the charts basically with my eyes. And we can say, from these fibs right here, this is where we want to start making sure that our TA is working. And so all we do is scan along. We want to see bounces where we expected to see bounces. We want to see, rejections where we expect to see rejections. We want to see dips get bought down here. If we're breaking and retesting, we want to see pushes up. Maybe we track to the next level. It's not always going to work like that, and just look at these levels. And again, we had all of these levels from longer time frames. Are they buying these strong zones and bouncing us? Are they rejecting these strong zones? And make sure your TA is working. And so this is, now we get to talk a little bit about how do we use these on, like, how do we use this on the short time frames? And so, I mean, we'll just zoom in, random spot here. How do we use this? Well, if we are, and this is obviously going to get more and more technical as we go. Obviously, some that we're probably going to have up when we're trading intraday. We can, we've covered these in classes. We're going to have some EMAs, and we're going to have our support and resistance levels, and we're going to have our intraday trends drawn. And what we're going to look for is breakdowns, breakdown retest. As long as we're below or right at this level, we aren't long. We want to be looking short. And then we do things like target EMAs. Well, on this day, and I don't know if people asked me this, I don't even, like on today, I don't know if people asked me this, it doesn't, we're just talking about every day. I don't know if people ask me, but down here, I wasn't ready to be a dip buyer on SPY. I wanted to dip to 606.53 because that's where my level is. Now, when we pushed up and pulled back down and all of a sudden it presented kind of a double bottom, you can start to think about it. And then again, I mentioned these ones on trade floor was all double bottom here. You can start to think about it. And we're a little away from our level, but we also know that is our worst case scenario stop out. If we're longing something like this, here is our, this is our entry. Our stop is basically closing a new low. And then our emergency get out, things are going wrong, is a break below this level. And so that's all we do. We just go day to day. If we're breaking above levels and retesting strong zones with 3 big levels, we want to be dip buyers down here. As we push up to here, you don't want to be the call buyers at these levels. You want to be the call buyers at support. You don't want to be the call buyer at resistance. Then if we break above them, sure, trade it, and get long stops below. Use your EMAs to tell you where the trend's going. If you are buying dips, use those EMAs as targets, then use your level as targets where, the trapped bulls are like that we're sweating it from being long up here. You're trimming big profit as all of them are just breaking even. And so trade them. If we're breaking below it, here's a day where it's kind of tricky, I mean, we do have our trend, but we're basically just between our 2 major levels. On a day like this, I scalp. That's all I can do. I look for quick volatile moves. If we push back up to this level, I'm for sure shorting it. That's how I trade. I take the obvious trade according to my charts. I short this move back down. That's all you can do. Again, we push up to this level. I'm shorting this move because it's the first move to that level, so I don't want to be in there. Let's see. Down here, break above all of our levels, retest our levels in EMAs. Now we target the next level. Then if we break above this next level, you can be a dip buyer here. You need to be realistic and say, okay, I'm getting in 601.30, whatever it is. Your next major level is 604.13. You can't you can't have $3 price targets. Not only will people make fun of you, but it's not good trading. You want to, especially for day traders, realistic price targets. So I personally like to manage my trades based on what the chart tells me. If we break above retest, maybe I buy this pullback here, we get another push up, I'm going to move my stops to here. If we, pull back again, maybe you buy this pullback, your stops are below the previous high. If you're buying calls, so you have to manage accordingly. But other than, every trade I take, I plan on it being a scalp, unless we are at these major levels. That's when I might start to say, hey, I'm going to hold on to this one for a little bit, maybe try to catch a trend. Here's a great example. Here was our level, break below the level, chop below it, sell below all EMAs. Trend is obviously going down. So we can look to be short, targeting our next major level. You obviously want to be trimming the whole way, but target those next major levels. And then by the time you get down here, we can even remove this trend. By the time you get down here, we know there's a trend there. We know there's a big level there. You don't want to be short there anymore. That's what we know from our levels. So this is, people freak, and this is what all my charts look like. It doesn't matter if you're asking me about SPY, QQQ, Tesla, Nvidia, AT&T. It doesn't matter what you ask about. All of my levels are daily levels, fib levels, Bollinger Band levels. They're all longer time frame levels. And so people will frequently ask me, hey, Tesla calls here. And I'll say, well, no, it's not for me. And when I say that, uh it's because I don't have a level there. So, and I don't want to say that my levels are perfect or anything like that, or they're always going to work. And, people love to tag me and say, well, I took calls and it worked. And nice, like I'm stoked for you. It was just not where my levels were. So something like SPY, where you can effectively make money on smaller moves with tight stops. You can be a little more lenient. You can look for those scalps when you're trading between your major levels on, your Apples and Teslas and Amazons and things like that. I more want to be buying the big supports, looking for moves up, or shorting the big resistances, looking for a bigger move down, because that gives you the better risk reward on a trade like that. On SPY, you buy the break and retest of the 9, you catch a 50, 60 cent candle and your contracts are up 30 or 40%. You aren't going to get that type of percentage on, your any of those big names. So that's how I decide what my trade is. And again, I'm looking for breaks and retests. Maybe I bought this dip, and here's an example of me getting stopped out. If I bought this and we keep chopping it and chopping it and chopping it, eventually when I start to see, bearish candle, pretty bearish candle, I'm setting the stop somewhere and I'm getting stopped out. So you can see it doesn't always work. Levels break. That's what levels do. They break downside and they break upside. So of course you're going to be wrong sometimes, but sticking with buying dips and sticking with shorting rips and buying those, like I don't short often. Like, we're in a wildly strong bull market. Nobody cares if you're the hero that shorts the top. Like, I look to buy dips because we're in a bull market. So if we pull to support, I'm likely trying to buy the dip. And obviously if we break below it, buy back above it with a retest, probably a trend break here too, I'm looking to buy this. And so I'll buy this dip right here on this level, stops below low a day or whatever it is, stops below that level. But use these levels and trade them. We see, all the time. Today was, a good example because, choppy day. So every push up, people are saying SPY to 609. Any push down, people are saying, oh, SPY to 603, and nobody was right for a very long time. It was sideways. And so today was a day where we knew where our levels were. If we were pushing up to these levels, we likely wanted to be short up here. If we were pushing down towards these levels, we likely wanted to be long. So like I said, we did catch a couple nice long bounces, and then finally this one, this big knife. And I think like I bought somewhere around here. I bought calls here. We sold down, we took the big knife. I bought the calls here. They didn't work. That's it. I got stopped out. I think they went to like zero. I had a few of them. But bought the dip here. Didn't get enough bounce to make money. That's just the way it goes when you're buying contracts 5 minutes to close. But trade these levels no matter what. I don't care if it's the first hour of the day or the last hour of the day. Just keep trading those daily levels and letting them tell you what to do, and you will find yourself having a lot more success, I'm willing to bet. And so that's it. That is my spiel on long time frame analysis for short time frame trading. As you can see, nice and cut and dry. And we'll be adding more and more and more to this as we go over the next few weeks, and really discussing trading and making the plans and how we trade these. It's easy enough to say buy calls at support, but more things need to be going on than just that. Yeah, choppy days, scalp for sure. If the market is shopping, scalp. I mean, I scalp all the time, because I mean, sure, the people who catch this like nice big old move up do really well, but they have to hold contracts and give back gains and make gains back. And so for me, I like to enter, look for a nice push, buy the dip, look for the next push up, trim most of my contracts up, buy the next dip, and you make more money while protecting your money better by taking those multiple different entries and just always booking profits, rolling profits into a new trade. That's how it works for me. I understand that won't work for everybody, but I would much rather take 4 20% trades than 1 80% trade. So fibs, how do you set them properly? Good question. So the interesting thing about fibs, there's like a million ways to do it. How I like to do it for a fib extension, I like to go to the most recent swing low up to the most recent swing high. And then generally for me, I like to do the pullback to the midpoint. Like I said, there's going to be a lot of people that have them here, and they're saying that we're sitting at the 23.6 fib. I have us pushing up towards the 78.6 fib, Bollinger Band levels, things like that. So my chart might look a little different than somebody else's, but when you do an extension, I do low to high to midpoint. That's just me. Yep, Rick, it should be posted here, next couple days. I doubt it tonight or anything, but should be up by the weekend. So it all depends, it all depends how recent, this was just an extremely volatile move. The S&P moved just, I don't know, $37. It moved $37 in 4 days or something like that. So this was a very dramatic move. That to me is worth putting a fib on. Some people, just to like show, let's see, it's more time. So one of the big fib traders that I like to listen to, I actually can't find his stuff anymore. I kind of think he went a little MIA. He ran these fibs, and then down to, let's see, so 347. Oops, I did them the wrong way. So he ran these fibs, not saying he's right or wrong. And these were the fibs that he traded, and this was from the 2022 high to low, or low to high, that bear market low to high. And then I just drug them over so we can see the levels a bit easier over here. These are what he traded all through, end of 2022 through 2023. And you can see how well, and this is from data from 2022, and it traded perfectly all the way 2023 to 2024. So you can do huge time frames, but maybe you aren't gonna, these are for your longer term swing traders, things like that. If you got months and months of time on SPY contracts, you can start to look to buy these dips and look for those moves to the next fib. Obviously, you never think that you're gonna get the run to 123% in a year or whatever, but it is what it is. But so time frame doesn't matter, or I won't say time frame doesn't matter. Find what works for you. And because I'm frequently focusing, I'm more concerned with my support and resistance levels. My fibs are normally going to be on just recent volatile moves. No, I would not be buying Nvidia tomorrow probably. So somebody else was asking me about this. Let's see. So we'll talk a little bit about it because we got 10 minutes left. If anybody's got to get out of here again, thank you for being here. We're just doing questions for the next 10 or so minutes. So Nvidia, obviously, nice, nice moves on it recently. Tech sector's obviously been lagging. And then you can see I basically lined up the bottom of this range with these previous highs over here. So could Nvidia push to all-time highs? Sure. And that's okay. And if it's a Friday, you catch an Nvidia ripper, that's great. I always look at things in terms of what is their range. The closer and closer and closer we get to the highs up here, I don't buy calls. Like I won't be long up here. Like Nvidia above 148, really 147, 148. I got no interest in longs there. I have a lot more interest in being short. And why do I think of it that way? Because of risk reward. So let's just say, hypothetically, Nvidia pops up, we get to 147.50 tomorrow. Well, I'd honestly be pretty interested in shorting it. And the reason that I would be, and I guess we did 148. The reason I would be interested in shorting it is because my stop loss is going to be over 150. So I have a $2 stop loss. No big deal, I mean, on the same day, obviously that'll obliterate you, but $2 stop loss, no big deal. If I say I buy calls right here, well, you have $2 of potential upside. However, I mean, it depends what you trade. I'm just going to use this is the 9 and 20 EMA. If you buy calls right here, or wherever you are, you got a couple bucks of upside. Your stop out is $7 below you. So you have a 3 risk, 1 reward trade. You won't last long in the market trading like that. You need to be right, whatever it is, 90% of the time to have those types of trades work. So I'm not super interested in Nvidia long up here. I was saying last week, I think it's about time for chips to get a bounce. My buddies and I were talking that SMH was, that's the semiconductor ETF. Based on this daily time frame, not a ton of interest long up here. Can it absolutely rip to 150 because it's Nvidia? Sure, but I don't have a ton of interest long up here. If I saw a nice little push up to 148 or so, I would probably be looking to short it myself. Well, so I see what you're asking about fibs, right? That was you who asked earlier. So you're asking about fibs. And now you're asking about the daily chart or the shorter time chart. I don't use fibs intraday. I can't say I never do. I will on occasion. But maybe you could have done like, your low to high fibs right here. Well, then you blew out the 100%. Sure, you bounced the 168, but then you blew out the top. These fibs weren't super helpful today. I rarely use them personally intraday. I'm much more concerned with my levels. If we're pushing up to my levels, I'm probably considering short. If we're breaking and retesting my levels, then I'll look for a little long, maybe to some previous highs, or break down, retest. I'll look to short that, but I don't use fibs much intraday. But on something like the daily chart, I'll show you exactly what these fibs are from. So we get rid of the fibs there. We'll just go second. So we get rid of fibs there. And I should say fibs are not necessary. Like, I mean, they're kind of an easy thing that give you some nice targets. So fib extensions. I look for a recent swing low, and obviously these are those lows right before elections, up to a volatile swing high. And I did it earlier, so we know it for a fact. I already ran the retraces, so people know the retrace of what it was. Then when you do an extension, you have 2 choices. And actually, I'm going to zoom out a little more so you can see this. So when you do an extension, you have 2 choices. So, we go from our low, and then we go up here to our high. You have 2 choices. you can just click right here and use these levels. And you can see we're rejecting that 23.6 level. Just fine. It's great. Well, with an extension, they give you the opportunity to give it a midpoint. So what I like to use on the midpoint is uh I will frequently pull a fib retracement, figure out where the 50% retrace is, and that's what I'll use as my midpoint. And the market just so happened this is the 50% retrace. We did that earlier, so we already had the 50% retrace identified. So I like to set the midpoint. Some people like to just set it off the high. I like to set it off the midpoint because that's just what I like to do. I mean, it's worked better for me. It's not right or wrong. I just like to run the midpoint on that 50% retrace. So you go low to high, find the 50% retrace, and you're good to go. And then trade those levels, and if you like even these ones, you can just use them, even you should obviously be using them for trading. They're important. Well, I mean, if you decide to use fibs, they aren't like you don't have to have them, but at all-time highs, they're nice. Use them for your bias. If we're trading like right above this level, you should be looking long. If we're trading up to these levels and rejecting, you should be looking short until we can get a break above with a push up. Obviously, if we just zoom in. So, if we're pushing up these levels, short them with stops above, or we're breaking down and retesting them, short them. And you aren't always going to get the $4 move back to your next fib, but you can just trade. These are, they're ready to go support and resistances for you. Here's an example of, not much to trade here based on these levels. We push up to it. If you short it, you make a couple bucks. If you short this one, there's like a 50-50 chance you stop out. Maybe you make a couple bucks. Or by the break and retest, you get screwed. Break and retest here, you make a couple bucks. So, it's not some foolproof way to trade, but it's nice to have a good strong level and nice to have a target and nice to have a bias. I mean, we happen to have one, the 50% extension lining up at 600, not always going to be that perfect, but break and retest of 600, yeah, you can probably short that without it being a fib, break and retest of 600, you can probably long that without it being a fib, so extensions can just be a really nice simple way to find yourself some levels to help you set a bias. Okay. Well, if that is going to do it, thank you everybody for being here. Long time frame analysis. I love talking it. So thank you. Thank you all so much. It's a class I love to teach, so thank everybody for being here. I really do appreciate it. And any trading sites I recommend? I don't exactly know what you mean by that. Yeah, thank you all. Thank you all for being here. I really appreciate it. Just for well then I mean Thinkorswim. Thinkorswim is what I recommend. The Charles Schwab was TD Ameritrade, but Thinkorswim it's this cream of the crop. I mean you do have to pay a buck or whatever to trade options. You get paid $1 per option contract, but if $1 is make or break on your trade, it probably was not like a trade you wanted to be in anyway. But I think it is the best charting software around. Okay, well, that is going to do it. Thank you, everybody, so much for being here, and we will catch you all tomorrow. Thank you so much. Have a good one.